And we are back after more than 3 weeks of vacation. We are back on our weekly summary where we cover all the news that happened this week, from Jackson Hole to NVIDIA's results to the different pieces of information, pieces of news that we've got this year. Are you ready for it? Let's dive in. Let's go. Hi everyone and welcome back to the channel. If you're new, welcome. I'm Micha Stocks, and in this channel we talk about stocks, we talk about companies, and we summarize everything that happened this week. And everything and anything that you see on this video is only for entertainment purposes. This is not financial advice, so please do your own due diligence. And this is our YouTube, which has 1.97k subscribers, and if you're new, you're able to get us just above 2K, at least for this week. How can you do that? Just click the subscribe button, and if you can turn notifications on, you'll be notified every time a new video is posted. Let's dive in. Here we go. This is how the major averages ended the week. The Dow ended on a red note, down 0.19%. S&P up 0.25%. NASDAQ is up almost 1.15% this week. Can you believe? And Russell is down 0.3. When we dive in year to date, we can see that the Dow is up 3.65%. The S&P is up 15.2%. NASDAQ is up 30% from the beginning of the year. It's crazy. An amazing year for the NASDAQ. And the Russell is up 5.8%. If you look at the crypto market, nothing new in the crypto market. Bitcoin is down almost 0.25%. It's not something substantial. Ether is down 1%. We're still waiting for the crypto or the Bitcoin and Ethereum ETF. The SEC is just pushing that can down the road. We don't know yet when it will be approved, or if it will be approved, of course. Everyone is waiting. The whole market is waiting to see if it will be approved. I believe it's going to be connected to the XRP, trial or decision, but we'll see. This is how the sectors themselves, the indices, actually performed. Technology up 2.27, consumer discretionary up 1.23, and on the flip side, we have the energy and consumer staples, which are down about 1%. Diving even deeper, we can see gold miners outperforming this week, hence the software, semiconductors, biotech, and others on the green, versus the retail, which we'll talk about the retail in a second, regional banks, oil services, and others who came in short. Heat map from TradingView, you can see that most of the big companies ended the week on a green side, mainly due to a very strong Friday. NVIDIA on the week up 7.9%. We're going to talk about NVIDIA's results in just a minute or two. Nothing special to talk about here. And this is the 10-year. The 10-year is up, as you can see, this week got to the highest point in years, 4.362. You can see it's up on an upward channel, which every candlestick, you see these are Japanese candles, is a weekly close or a weekly open and close. And there might be a turn down on the 10-year, which will provide a bit of oxygen to the market itself. And if you felt that the market this week was volatile and stocks went up and down and you feel like it was a very problematic week, I want to turn your attention to this weekly candle of the S&P. I'll give a quick explanation what we see here. What we see basically is the highest point that the S&P went to this week, which was 44.58, and the lowest point, which is 43.56. Which means that the whole volatility this week was 100 basis points. That's all. And if this is the volatility that you felt across the week because you have higher beta stocks, then you need to look at your portfolio and decide if this is the kind of volatility you want to deal with. Of course, higher volatility or higher beta stocks provides or might provide higher return, but also the volatility and the loss might happen as well. That brings us to this week. This week, the major event, of course, Jackson Hole on Friday, where Jerome Powell and other Fed members like Christine Lagarde, the head of European bank and the Japanese head of a financial system all met up in Jackson Hole with the other Fed members and talked about what is going to happen next week. Basically, Jerome Powell said nothing. He didn't say anything that we haven't heard before. He went back to inflation needs to go down to 2%, labor market is tight, we want to see the cooling in the labor market. He provided doves a bit of information, he provided the hawks a bit of information, but basically he tried to thread the needle again without saying anything. The big problem that came out of that Jackson Hole is the fact that he didn't say anything. He didn't talk about the GDP, which we're going to see in a second. That is very high. He talked about the participation of women, which increased the pie, of course, of the labor market, but he didn't really give real answers to that. So he left the market hanging with the thought that maybe we will hike rates again. Currently, the market is pricing November with another hike, but nothing more than that. We also had several retail earnings and, of course, NVIDIA. We're going to talk about NVIDIA in a second, but I want to address retail earnings beforehand. During the week, we heard from several big retail chains, and between all of them, the major theme was shrinkage. Shrinkage means that the theft that they're seeing is a lot higher than they've seen before, and due to that theft, their inventory is shrinking. And that is the reason why their results are being hammered by. Now, you cannot say that it's not true because it is happening, but on the flip side, they need to find a way to deal with it and not just complain about it in earnings results. Now, I don't want to be in their position. I'm just saying that it's a great excuse, but you can't keep on using the same excuse without doing anything else, because on the other side, we did see companies like Abercrombie & Fitch and others which might have had the same problems, but they dealt with it in a different way. So we saw Foot Locker getting hammered, we saw Macy's getting hammered, and others getting hammered. Even Dollar Tree got hammered, some of it because their forecast was reduced, and some of it because their financial results were just not good. Peloton, with a very, very lousy results as well, also got hammered during the week. On the other side, we saw Firm with strong results going up the week, also Alta and others. Now, let's talk about NVIDIA. The whole market was waiting for NVIDIA. The whole market was waiting to hear whether the AI was just hype or AI is true. And the way to measure it is pretty easy. If you want to know if AI is hype, if a specific company is just blowing hot air and saying AI, but they have nothing, versus a company that has AI, whether they say it or not, just look at the financials. Just look at their revenues. And this is the revenue breakdown for NVIDIA. You can see Q2 picking up in a dramatic way versus other quarters. And thanks to App Economy Insights for sharing this on their Twitter account. You can see on a very clear way, it's not even debatable, that they hit the ball out of the park. An amazing, amazing beat, both top and bottom line, raising forecast and saying that they have visibility for at least a year for all the orders. Now, yes, you can start hearing the bears or the ones that missed the NVIDIA rally saying, oh, they might have brought in sales earlier than expected and this and that and competition. Well, we keep on hearing that every time there's a company that is doing something dramatic. Competition is coming, they brought sales early, but at the end of the day, NVIDIA did something amazing. And to take it even another notch forward, you can see the data center taking off. Why is that important? Because Intel keeps saying that they're losing market share in data center because there's no demand. Well, there's huge demand, just not for Intel. AMD also grabbing, but not grabbing as much as NVIDIA. But if you've seen the stock reaction, you might say, well, it was amazing, but why did the stock go down? Well, the stock went up 220% or something like that year to date. Some of the investors took some money off the table where the institutional investors didn't yet jump into NVIDIA, but who did, the analysts, which raised their price targets in a dramatic way. Leading the way is Rosenblatt, which gave an $1,100 stock price for NVIDIA. NVIDIA trading as I'm recording this video. Let's check NVDA. trading at 460, which is over 100% of where they are as of today. Yeah. And yet it went down on Thursday and Friday. This also happened this week. The BRICS formally invited Argentina, Saudi Arabia, Egypt, UAE, and Iran. BRICS, formerly known as the countries that their first letter starts with BRICS, now expanding. This is trying or attempting to be a substitute for the dollar, something that would compete with the dollar. But as it seems right now, and assuming that the listeners of this video are part of the Western world, the companies that are joining in the BRICS seem to be the other side of humanity, democracy, and all the rest. So you can choose your sides. I know that none of these countries are, let's say, countries I would like to align myself with, maybe some. GDP, the one measurement that the Fed did not talk about, Jackson Hole, or at least not in the press conference, is GDP. GDP as of August 24th is measured at 5.8. This is through the Atlanta Fed, which has a lot of real-time data gathering, and the assumption is that their numbers are pretty much accurate. At the end of the quarter, it's not going to end at 5.9. It's going to end probably lower. It's going to go around the 3%, but still 3% GDP on a quarterly measurement is very high. It means that the US economy is hot. There's no landing because it keeps flying. It's not even moving. And some of the voices say that it's just pushing the recession forward. Some are saying there won't be a recession. And that's something that we missed with Jerome Powell not mentioning anything about that. Tesla making splashing news on Cybertruck, not mentioning the price, not mentioning the date, but Elon Musk uploading several pictures showing the production vehicle, and we've seen them on trailers and others going to Fremont and other places. But on Friday night, Elon Musk took his Tesla, I don't know if it was an S or an X, to, let's call it a beta trial or a pilot or whatever, on the new version 12, which has no code, only neural net, meaning that the software was not trained by code on what to do. It was trained by itself through videos, through pictures, through a lot of experiences on how to drive the car itself. This is a huge breakthrough. Of course, everyone would say competition is coming and all that. Anyone and everyone that's involved in AI understands the magnitude of a software that does all that. And of course, look at the number of views from the account of Elon Musk. Polestar, on the other hand, decides to partner with Mobileye for their autonomous driving. India is probably going to change their tax rules in order to provide Tesla the avenue to start importing into India. Alibaba launches their new AI model that can understand images and create and have more complex conversations. Ticker BABA, B-A-B-A. Amazon is in early talks, with Disney, talking about ESPN, one of the last, I want to say, avenues of Disney to trying to generate more money through their asset of ESPN. Disney in one of the worst stocks in the last year, coming to a price that is as low as 2004 or something like that. Really low price for the stock. Does it mean that Disney is going to close shop? Probably not, but it does mean that their stock right now is under a lot of pressure. Probably in the next few weeks we'll understand why. And Boeing. So the story of Boeing is very easy. Thursday, there's this headline saying Boeing finds new 737 MAX defects. Stock goes down, and Friday they say it's not going to impact anything and we're going to keep shipping planes, and the stock goes back up. So that's Boeing. If you're an investor in Boeing, just know that every week or two you might hear something for 24 hours, and that's it. Microsoft is bringing Python, a developing language, into Excel with a vision saying no one needs to leave the Microsoft ecosystem and go to other software tools. The S&P, not of course the S&P 500, but the S&P as a rating tool joins Moody's in cutting U.S. bank or regional banks. Some of the regional banks, they're cutting their rating. Reason is because if rates stay high, or even if they go higher, these banks might get hammered. KeyCorp, Comerica, Valley Bancorp, UMB Financials, and Associated Bank Corp. And Microsoft really, really wants Activision Blizzard. How much do they want? Well, they're going back to the UK regulators with trying to define a new deal, saying we really want to buy Activision Blizzard. We'll do whatever you want. I have no idea why they want Activision Blizzard so bad, but it seems like they really, really, really want Activision Blizzard. And SentinelOne hired Catalyst Partners to explore potential acquisition by a private equity firm, meaning SentinelOne sees that their current market value is lower than they perceive. Whether they're going to go off the market or they're going to find someone to acquire them, they're on the shelf. And while we're talking about shelves, Rite Aid, ticker RAD, is preparing to file Chapter 11. This, of course, once the news hit, the stock went down by 30 to 50% because they are probably going to go for bankruptcy. And if we're talking about stocks and new stocks, ARM, a company that was in the stock market in 2016, was taken off the stock market by SoftBank, who acquired it for a bit more than $30 billion, is planning their IPO probably the first or second week of September. A lot of push of trying to raise a valuation of around $70 billion, but their financials don't really support such an valuation, so we will see. Instacart, on the other hand, also filed for IPO. Ticker would be, for ARM, ticker would be ARM. For Instacart, ticker would be CART, C-A-R-T. Their financials look a bit better. They're growing and they're creating profit versus ARM, which is not really growing. So that's CART. Another company which IPO'd this week, actually through a SPAC, is Better.com, a US-based mortgage company which they're already providing the punch, fell 95% on the first day of listing. You might know their CEO from a viral video that went through 2021 where he fired 900 workers on a Zoom call. That happened in 2021. From that point till today, they SPAC'd and went public, a valuation of between 2 to 4 billion, and they fell by 95%. You want to see how the chart looks? This is how it looks. IPO today from $10 or $20 all the way to 1.19. That's why participating in IPOs, if you're not an institutional buyer, if you're retail, just be careful. This is not financial advice. This is just an advice of someone that has seen these evaluations. Retail investors would come always late at the highest price, sometimes would not be exposed to all the information, and retail investors would most likely feel the rug pull because SoftBank, as an ARM and others, would want to take a lot of money back. And by taking money back means that they're going to flood the market with their stocks. And if we're talking about Better.com, we cannot miss the headlines around Hawaiian Electric. Hawaiian Electric in the last month, their stock price went down from 40 to 9.5, mainly because they're being blamed for the extended damage of the wildfires in Maui after not listening to all the warnings and not shutting off the electricity. There are lawsuits right now submitted against Hawaiian Electric. That stock is getting hammered. I don't really see how they're going to get out of it, but it would be very interesting to see. And the last stock that we should talk about this week is AMC. AMC did a reverse split during the week. A reverse split meaning that if they traded at 1.2, now they're trading at 12. It means that they reduced the number of stocks, and they also combined their stock with Ape. Ape was a different stock that they had. I'm not going into the technicalities behind what they did, but let's just look at the stock price that went down all the way from 43 or 46 to 12.43. Roughly 72% 1% of a drop. That is the news of the week. Let's talk about what is going to happen next week. This is what's going to happen next week. We're going to see several companies left. Some Chinese like Neo and Pinduoduo are going to report Tuesday before the bell. Best Buy, Big Lots, we're probably going to hear from them about shrinkage. HP and Box are going to report after the bell on Tuesday. And Wednesday, a more interesting day with CrowdStrike, Salesforce, Okta, Chewy, Viva, Five Below, and others are going to report after the close on Wednesday. And Thursday, before the open, we're going to hear from Dollar General. Dollar Tree reported last week. Polestar, UBS, Campbell Soup, and others. And after the bell, we're going to hear from Broadcom, Lululemon, MongoDB, SentinelOne, which we talked about during this show, Dell, VMware, and others. We also have some economic reports this week, mainly the PCE. We're going to get the inflation report that the Fed loves. The core PCE is going to be reported August 31st. And we're going to get, as usual, September 1st, payrolls for the market. And we're going to end with the S&P 500. And if you haven't been sleeping under a rock, you might have seen everyone talking about the possibility of a head and shoulders. Head and shoulders is a technical pattern. Let me just hide a few of these lines so it'll be easier for you to see. You know what, let's keep them. Let's keep them. I'll explain while we have them here. Head and shoulders pattern, in a very easy to explain way, is the fact that you have a pattern of a stock going up, correcting, breaking that high to a new high, correcting down, and trying to create a new high, not possible, and coming down. This is, let me just hide the stock for a second and you'll be able to see it. Why isn't it letting me? I can't hide it. Hide it? No. This is the pattern of head and shoulders. Let me move it aside so you'll see it here. It's not letting me do what I want to do. Everything hid. No, that's really not what I wanted to do, but never mind. So we have seen the head and shoulders pattern. The question is, are we, here it is, back, are we going to drop under, or are we going to fall under 43.28? If we are, and this is called the neckline, it means that the height, or this 276 points, will be dropped, not at once, and this is statistical, of course, might happen, give it whatever percent you want, all the way down to 40.49. This line is, of course, the moving average. Let me hide that moving average. And we might fall all the way to 40.49. Will it happen? We don't know. We will need to see, but no doubt 43.28 is very, very dramatic. Another thing that the bears, not the bulls, the bears will need to defend is the 50-day moving average. Let me hide this now. The 50-day moving average is something that we dropped underneath and we weren't able to pass through on Thursday. If the bulls will be able to pass over the 50 moving average, this is a very good, if you're long on the market, of course, this is very good news. If the bulls will not be able and the bears will push it down, then probably the head and shoulders scenario will come into play. Probably next week on our weekly summary, we're going to see if the head and shoulders played out or it was just a fear that they tried to put us in. I'm Micha Stocks. If you enjoyed everything, please smash that like button. You can share with your friends this weekly summary. We are back on weekly summaries every week, same time, same place. See you next week. Bye-bye.